Welcome back. Well, for the markets, it is definitely weak, and there's further pressure, which you can see, in fact, in the mid-cap index, which is now at the low point of the day, down around 1.7%. So currently trending further lower for the advanced decline ratio as well. But let's talk about specific companies now. Nelco is in focus on the back of its Q2 numbers. The company saw pick up in the revenue, but the margin declined both sequentially and on a year-on-year basis. We have with us PJ Nath, who's the MD and CEO of the company, joining in to discuss the outlook going forward and the performance this time round. Mr. Nath, thank you very much for taking the time out. If you could just start by talking about the margins, which have actually seen quite a significant decline as compared to what you have been reporting in the previous quarters. Q2 was at 13.1%. It's been declining in the past 2 quarters, but it's a multi-quarter low. So what led to this?
Good afternoon. Thanks for getting me in the show. As you said, our revenue has gone. Our revenue has gone up by 11% sequentially, 8% year-on-year, which is a very positive sign. The margins are lower. 2 reasons. One is that some of the revenue mix has changed. The other point is that we have made significant investment in terms of increasing our supply bandwidth capacity. In anticipation of some of the larger contracts that we are anticipating, which will be coming in, there's been a mismatch in terms of when the capacity has been brought and for the new contracts to get coming in and getting implemented. And that is why you'll see a temporary dip in terms of the margins going down. However, as we go along, as these new contracts keep coming, our capacity has already been augmented, and so therefore we start making more margins. So overall, we are bullish about the year as a whole. And I think in the past also I've said that every individual quarter may not be indicative of how the business is doing. So overall, from a year perspective, we are quite bullish, and the margins will go back to what we used to have earlier.
The margins earlier you used to have were above 20%, at least for FY24. And over the last 3 quarters, we've seen them deteriorate. I take your point that, you've been investing ahead of expected demand, ahead of expected utilization itself. But with all of that coming in, what would your quarterly run rate on the top line look like? One understands that maybe margins would, glide back to those earlier levels. But over the last many quarters that I've been looking at, your top line on a quarterly basis has been hovering between that 75 crore to 80 crore at best, this quarter being 82.5 crores itself. So on a quarterly run rate, what is the top line that we can expect once all these orders start kicking in and your utilization increases?
So we don't give a future guidance in terms of revenue, but I can only say that Q2 has been a good quarter from us from the perspective of where we were earlier. And we see a positive momentum now. So we will see the revenues going up as we go along in the next 2 quarters and beyond that. So I don't want to give a specific number, but suffice to say that it will be growing. And I do understand what you're saying in terms of where is it hovering. It will go up. There's been some amount of lag in terms of some of the contracts coming in, but we see them happening now. As we have entered the month of quarter, in this particular quarter, OND, we see a lot of these orders coming in and getting implemented. And so you'll see a revenue growth for the next 2 quarters and a year as a whole.
So can we just drill down into numbers? Maybe if you could share some percentages with us and some targets with us. FY24, the margins were 18.5%. You're expecting to revert back to those levels?
Yes, we'll be in the range of 17 to 19%. So that's where we'll be eventually for a year as a whole. Yeah.
Okay. And when you talk about revenue growth in the next 2 quarters, you clocked in 11.4% on a year-on-year basis this quarter. So are you going to do similar levels? Is it going to be, can you share a range with us in terms of what we can expect on a year-on-year basis in terms of revenue growth for you in the next 2 quarters?
Yeah, that's like giving a future guidance, but I don't really want to give it at this point in time, except to say that it will be growing beyond what we had last year. And we'll keep talking about it as we go along. Yeah.
All right. Take that point. But, your license for in-flight and maritime communication issued by the Department of Telecom, how much has that started contributing? Because you did say that, this could be about 25 to 27% of your overall revenue can pick up in the next 1 to 2 years. So Wanted to understand how that part has panned out and what's the pickup likely to be here?
When you say in-flight and maritime, that license has got two parts. One is the Aero IFC and the other one is maritime. So together it is that. We are hovering between 23 to 26, 27% for the IFMC revenue as a part of our total revenue, as a ratio of our total revenue. So that's what we've been doing. It has been a satisfying business for us so far. Where it'll have a significant growth would be when the domestic aircraft start offering Aero IFC services. We have done a lot in terms of creating the infrastructure. But it is also under discussion with the individual airlines. And they are trying to see what is a business model that can work out, a business case that can work out for them to offer this service in the domestic routes. So as and when that happens, there will be an upside. But as of now, we are in that range of 23 to 26, 27% of our total revenue coming from IFMC.
There was an issue which had taken place, I think, recently on your Intelsat satellite, one of the satellites that the company does use. Is there any financial impact of that? And can you tell us what the status is?
It is an unfortunate event, very rare event that a satellite is lost and it has not been able to bring back. So that's there. However, we have enough satellite bandwidth capacity. And so therefore, we are migrating all our customers who are on the specific satellite of Intelsat onto alternate satellite. So that exercise started on Sunday itself when we got this news. And we are taking care of all our customers. So we don't see any impact because of that on our customers, because we had adequate capacity to take care of all our customer needs.
Just two quick questions, or a two-part quick question before we leave. One, government defense and enterprise segment, you are preferred partners. So how much does that account for in your overall sales? How much is that likely to grow to? And second, the big opportunity that everyone keeps talking about, right? Wi-Fi on domestic consumer commercial flights as well. What is the total addressable market here? And by when does this materialize in terms of numbers for you?
On the first part, so we used to do that strategic electronics business, but we have exited that. So we are completely a satellite communication service provider now. So from that perspective, we have looking at only satellite communication. So we don't look at earlier strategic electronic business, because VSAT business is far more profitable as compared to the strategic electronic business. So that's one. Second is in terms of the domestic aircrafts. See, that particular thing has been under serious discussion. So I'm not keen to put up a specific number, because there are alternate business models being looked at as to how to make it happen. So the whole thing will depend on what innovative business models are created, what kind of revenue streams are getting created, etc. So I would say it will take about another quarter or so before we are able to come up with what kind of a market revenue that it can give.
Okay, all right, Mr. Nath, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Nelco. That stock is down around 5% reacting to what has been a margin miss this quarter, despite the revenue picking up. But the company does expect the margins to probably revert back to those levels of 17 to 19%. We'll take a short break, but up next, we'll talk to the management of Supreme Petrochem to decode their Q2 performance. Stay tuned.